morning, ladies and gentlemen. Welcome to the Orko Silver Corp Management Call. I would like to introduce the President of Orko Silver, Mr. Gary Cope. Please go ahead, Gary.
Good morning, everyone. Good afternoon for those of you who are back east, and good evening to those of you calling in from Europe. My name is Gary Cope, President of Orko Silver. I'd like to thank you for dialing in today to hear about the new and very exciting 43101 independent resource done by MiningPlus and Associates and released by a Orko press release on September 20th. On the call with us today, we have Orko management as well as Mike Collins of MiningPlus and Associates to try and answer all of your questions. And we're going to keep going as long as it takes to get all the questions answered, so there is no time limit on it. I'm going to make some very short comments and then ask our VP of Exploration, George Cavey, to talk about the details of the new resource, and then we'll open up the line to questions. As all of you are acutely aware, this new resource has been a long time coming. But now that it has been completed, we couldn't be happier. The results are extremely impressive and will form the basis for a new PEA, which will be completed by AMEC in the coming months. As you might expect, we've had a number of mining companies reviewing the new data, and they're probably working on their own mine designs as we speak. We currently have 8 CAs signed, all with standstill clauses. Can't say much more on that topic as we are under confidentiality. I would now like to ask George Cavey to talk about the new resource.
Thanks, Gary. Welcome everybody. Hopefully we can answer all the questions in the time we have here. I think what you have to be, we're all very excited by this new resource estimate, and it represents a considerable change from what we had prior to the release of this new resource estimate. What we have now is we have moved from a model that was a combination of underground to open pit to a combination of dominantly open pit with a very minor component of underground. And that represents a great opportunity moving forward and makes it a lot of different ways of approaching this. But however, with the open pit scenario, you have most of your resources that are easily amenable to methods that tend to be a low cost per ounce. Now, however, saying that, we have a deposit that originally was looked at in our PEA, which is now no longer considered current and valid, but gives us a good basis for comparison. It had us looking at approximately 7.2 million ounces of production in a silver equivalent basis over 12 years, so approximately 84 million ounces. This new open pit resource is considerably larger than that and gives a mine life, looks like it could be much bigger. We have to wait, of course, for the PEA to fully know how significant this is and how the economics turn out. But however, just moving from the open pit side to the underground, away from the underground, is a great change and is a positive step for the company. You have to look at this deposit in light of how many ounces, contained ounces, are now in the open pit category, both indicated and inferred. And at the moment, we're looking at approximately 110 million ounces of silver equivalent in open pit indicated, and 127 million ounces of silver equivalent ounces in open pit inferred. The things we'll have to do in the future, obviously, is some drilling to move that inferred into indicated, but that will come after the PEA with the recommendations in the PEA. What we need to do now is complete the PEA. There's a number of potential steps we can do moving forward. Some resampling that we've identified, MiningPlus has identified, that may add some considerable good information to us. There's other things that we'll look at as we move forward. It makes the most sense to optimize the PEA with the hope that the recommendations will move us to a pre-feasibility or feasibility study. So I think that's where I'll leave it, and I'll throw it open to questions.
Okay, so ladies and gentlemen on the phones, if you have a question, please press 01 on your phone. If you want to withdraw your question, press the pound sign, so 01. And if you do press, someone's going to come and take your name so that we can introduce you. So 01 on your phone if you have a question now, please. We actually have quite a few questions on the bridge. Please go ahead, Alan.
Yes, I was just wondering why Mike Debji has sold shares in the last week or so. Insider doesn't look good. Could you comment, please?
This is Mike. I'll comment on that. I I have a tax problem, exercise my stock options, and that's the purpose of me selling.
Thank you.
80,000 shares I sold.
So our next question, please go ahead, Paul.
Gary, this is obviously great news and a great news conference. I just wonder about the timeline for the new updated PEA and then the eventual feasibility study.
I'll answer that. It's George calling, George Cavey answering. What we're doing now is finalizing all of the bits and pieces that have to be completed to complete the PEA. One of the things that has been recommended is some infill sampling. MiningPlus has identified some areas. We're just reviewing their proposal now, and the timing of that. It shouldn't take too long, but several months to do the work that they were recommending once we start that work. There's other things we're considering. We're reviewing some potential drilling. We haven't decided if we're going to do that, but if it makes sense, we might do that. Could be a delay, might not. It'll depend on what makes the most sense in the near term. We need to look at all aspects of moving this from PEA to the pre-feasibility study. Once we get the results from the PEA, it'll give us recommendations, and those recommendations will tell us how much we have to do to actually complete the feasibility. So without that PEA document, the preliminary economic assessment, we don't really know how much or how long it's going to take. For example, one of the things we have to do is we have to move the in-pit inferred resources into indicated categories so they can be included in the feasibility study. So that being the case, we need to get MiningPlus to tell us how many meters of drilling that we need to say how many meters of drilling that's going to take and how many holes, and we don't know the answer to that, so we don't know how long that will actually take. But it will be some drilling. There is a lot of work done prior to Pan American losing their option and not completing the feasibility study. They did a lot of very good work, and that work, some of it is partially done. We are looking at how much we have to do, say, more metallurgy for what they started but didn't finish. So certain samples are sitting in labs waiting on instructions from us to complete. And we will be guided by AMEX PEA to tell us what to do with those samples and how much it will take to move those into the feasibility study down the road. Things like that, we can't really say how long it'll take. As for the PEA, we know right now that AMEC is working on the PEA, and we'll be guided by what we still want to do, and we're just going through that. We said in the news release it'll be sometime in the new year, and I believe that'll be the case.
George, just to continue a bit further, does Orko have enough money to take the company right to the feasibility study?
At this point in time, feasibility, we don't know what it'll cost until we get the recommendations out of the PEA. However, we have enough money certainly to complete the PEA. We have about $12 million in the bank. We anticipate that the work that is proposed and to complete the PEA, I'm guessing, shouldn't be much more than $1 million, and we certainly have enough money to do that. But as again, we don't know how much drilling, how much metallurgy, how much other work that was started by Pan American but wasn't completed. We don't know what the costs of that are yet.
I don't know if this is a fair question, but what are the chances of Orko lasting until a feasibility study or being bought out before that?
Well,
okay. Paul, sorry, is that Paul still?
Yeah.
Yeah, this is Gary.
Hi, Gary.
I think the chances are pretty good. I mean, feasibility is quite a ways off. Again, we have 8 CAs signed. We're in active discussions with at least 3 or 4 of those. So I would say there's a good chance that we won't make it to feasibility. You got to understand that this new resource has thrown everybody taken by surprise, and everybody's gone back to the drawing board to realize this could be a lot bigger than everybody thought. So. But in answer to your question, I would think we wouldn't go to feasibility.
Okay, thank you very much, Gary.
Our next question is...
Thank you. For Mexican silver miners already in production using pit mining, what are their cash costs per ounce?
Well, you take it, George. They vary
Yeah, they're all over the map. Some open pit are cheaper than underground. Some, I think you're better to look into the various analysts' reports. They have summaries of that sort of thing. I haven't tracked it, but you're talking typically anywhere from, I guess 8 to 15. I would think in Mexico is a range. Ours in the PEA that was suggested, which again is no longer current, came up with around 11. So we were in that range.
Okay, so on the old resource estimate, the cash costs were just under $12 an ounce. So the cash costs on a pit mining method would actually be quite a bit less. They could be maybe $8 an ounce, $10 an ounce.
I don't have an answer to that right now because you've got to understand that that's going to come with the PEA. Conceptually, it could be lower if you're talking a smaller operation. If you're talking a big operation, your cap cost could increase, but your cost per ounce could go down, your cash operating cost could go down. But however, all of that is speculation at this point in time because we have no idea how big, when you're looking at a deposit size, what we're looking at is completely different from what we were looking at before. Instead of the 7 million tons per year, what you see with this size of resource is something that would be north of that.
Okay. For the upfront capital expenditures for the open pit compared to the prior mining method, would that be quite a bit less also?
Well, the other method did have an open pit component, and so there was already an open pit section in that did have costs which were lower than the underground. However, with this being virtually all an open pit deposit now, or a deposit can be mined by open pit methods, you have to remember to move this deposit, which is quite a large deposit when you combine the indicated and inferred. When you move it and look at a number that large, you realize that your mine life is going to be longer than the 12 years suggested by Pan American. I don't know how long at this point in time. We have to wait for that PEA. And your amount of ounces per year conceivably could be quite a bit bigger than what was suggested.
Okay. If you wanted, if 25% of the inferred makes it to the indicated, would that be low, or are we looking at something more like 50% of the inferred making it to the indicated?
I don't have an answer for that right now because I still don't know how much drilling or whatever will be required to actually move those ounces into the indicated category.
Yeah. Okay. This is Mike Collins with MiningPlus, and
one moment, please. Just hang on.
Mike Collins with MiningPlus. So we've been involved putting the resource 43-101 compliant resource calculation together. There's a couple of things that you look at when you move indicated or inferred into indicated category. One is, we probably, if we're moving that forward, we want to look at the things that are near term in the mine life and focus on that, because you don't move your entire inferred into indicated prior to starting a mine. You want your starter pits to be solid, all indicated, and moving them into measured. But it's a cost, time, benefit. Sort of how long are you going to drill before you move on to feasibility? And those are the issues that are faced. But certainly there's good opportunity to move significant inferred resources into the indicated category.
Okay. The last question was for Gary. Before the new resource estimate came out, NPV was $315 million at $25 silver. NPV was around $900 million at 38 silver. If silver goes to $50 again, that would take the NPV up to around $1.5 billion, and that increase is much higher than the percentage increase in the silver price. Do I have that correct?
Yeah, George has just handed me a slide in our PowerPoint that's to be updated. But silver, it's very silver sensitive. Obviously, the higher silver price goes, the bigger percentage of the growth. So you probably do have that right. We will have a new slide in our PowerPoint that addresses that.
Yeah, I'm coming up with, at $33 silver where we are now, the NPV at 5% is around $600 million. And if the silver price were to go up 50% to around $50 an ounce, the NPV of the deposit will go up to $1.5 billion, which is a 150% increase. So you got a 150% increase in value on a 50% increase in silver price.
You're based on the old PEA, right?
Yeah, on the old one, yeah.
Yeah, which is no longer in effect, but you will see something similar, for sure. The higher silver goes, the greater gain you have in the NPV. So yeah,
as a shareholder, which I am, and I see silver going to at least $50 in the next 2 years, I am okay with no takeover until the silver price reaches $50, because to me, that way I would make more money instead of the company who would be doing the takeover. And so, as a shareholder, I would be okay with waiting. And I thought I would, let management know that, because as the silver price goes up, the NPV of the silver deposit goes up exponentially. And
you got to remember also, though, that NPV is, and if you're using a $50 silver price, is based on the life of the mine, not just the current price. So, you get the analysts don't use the current price in an NPV. They use a price that they believe, will last the life of the mine.
Okay, I'll keep that in mind too. Thank you.
Okay.
Okay, so we'll go to our next question. Please go ahead.
Good afternoon. I'm just curious as to what caused the 1 week delay in this conference call. What do you know now that you didn't know a week ago?
I apologize for that one. It's George Canby speaking. I was in Europe traveling, doing some presentations, and we just could not get a schedule. Every time we tried to come up with a date, I was either in a plane or a train as well. MiningPlus could not be here due to prior commitments, so we announced the date and then realized that neither Mike or myself could be there.
Thank you.
Our next question is from, please go ahead.
I'm not sure who this should be directed to, but if the economics on the new super pit concept are favorable after you get the new PEA, what do you think the potential numbers we should be looking at in terms of mill size and production?
Art, pretty simple.
Morning, Art.
I mean, it could be a very large operation, but I think a realistic scenario to look at would be 200,000 tons per day of rock, which would give you 15,000 tons per day through the mill. Recovering around 80 grams of that would translate into 12 to 13 million ounces of silver production per year. To start off, perhaps you want to grow. Sorry? Yeah, with 100,000 ton per day of rock moving, with a 7,500 ton per day plant, 6.5 to 7 million ounces per year is possible. So those are basically the scenarios that we are tentatively contemplating at this point. Just throwing figures off the wall.
Yeah, Art, how does that compare with other big silver mines, say in Mexico?
There isn't anything that big in terms of daily throughput, in terms of rock moving. I mean, obviously, companies like Fresnillo and Gold Corp Penasquito are moving, vast volumes of material as well. But one is underground and one is open pit and one is polymetallic. This is a pure silver play. So there's really nothing in the pure silver sector that would be the equivalent of this particular scenario operating today.
Okay, thank you.
Our next question is from, please go ahead.
I have 3 questions. The first is, with 8 mining companies executing confidentiality agreements, will Orko consider not only just a JV similar to Pan American, but an outright sale of the company should offers come forward?
Gary answering. We obviously have made we haven't hidden the fact that we would prefer an outright sale. The JV is what we had with Pan American. I think if you ask the mining company, any mining company, whether they'd like to have a junior around with a carried interest, they'd probably tell you not a chance. In answer to your question, we would prefer an outright sale.
Okay. Next question. Are you giving these companies that are executing CAs a deadline for any offers?
No.
Okay. Last question, since it's now kind of a super open pit, and the underground mine previously was in the higher grade, which was pretty far down, would the initial years of a super open pit produce much lower grade than initially thought?
Not this George responding. There is a number of areas that are right at surface on the west side that are of the normal grade, the higher grade. So there is good grade at surface, and one of the pits that was proposed by the old PEA. So the other two pits, they have material there at surface that seems to be economically viable, and so you're not just having to wait till you get down there. There is material at surface that is achievable and probably at a lower strip ratio than the 13-to-1 that we're suggesting.
Okay, thank you. That's all my questions.
All right, next question. Please go ahead.
Yes, hi, Gary, George. Some of my questions have been answered, but I guess, George, this might be to you. You mentioned about more drilling. What struck me was the drilling in Martha has not been completed to test depth extension. So what's your sense? Do you think Martha goes quite a bit deeper, or you comment on that?
Well, what you do is you look at this as it's an epithermal, low sulfidization epithermal vein system, and these things tend to coalesce at depth. And so where we've tested it is only to a certain part. And you got to remember, too, the geometry of this deposit. It's lying on its side, essentially. So depth is actually off to the west. It's truly depth below where we're looking at it. And so that area in the theoretical model of an epithermal vein system tends to be of the probably more base metal rich than precious metal rich. We're definitely in the precious metal rich component. So it is areas where we have no doubt from the geological model it should coalesce at depth. We have no idea what the grade and what we see some base metals down there, but not enough drilling has been done. I don't see that as an immediate target. There's probably other targets that you can grab ounces in the pit that are probably more economical ounces right away. That could be future underground mining from the pit basement. So at this point in time, it is geologically, there is the reason to believe that the veins do coalesce, but it's not a target we're chasing immediately.
Okay, thanks. Just an add-on to that. There was also mentioned sampling the Pan American drill core required due to insufficient sampling density. What do you mean by that?
MiningPlus was able to determine that there was a number of holes that there was visible veins that were observed and not sampled. And there may be reasons why they didn't do that, but we need to go back and relook at all of that sampling and say, well, why wasn't it sampled? And they're in the block model right now. Those results show zero grade because, of course, there's no sample collected from where the visible vein is. So we need to go back and we're just talking with MiningPlus about a proposal to do that. And so we will likely proceed, but at what level we just don't know, and how long it'll take. Should take no more than about 2 months, and shouldn't delay the PEA because it'll be a part of the PEA.
Okay. Gary, this question's for you. Now, I missed out on the gentleman that called in about the negotiations that you've been doing, but I did pick up on a King TV interview. I guess somebody had called in, and you had mentioned to them that you were in serious negotiations with 3 or 4. I'm not sure if I got that right, but I think he had asked the interviewer had asked a question about whether how long it would take to bring the inferred to indicated. You said you might not get there because I think the timeline was near year end that you thought the company might be taken out. Is that?
No, he was talking about feasibility. Between now and the full feasibility.
I'm sorry. Okay.
Yeah.
Okay, but was he correct in your 3 or 4 companies you're in negotiation with? Is that reasonable?
We're in. How would I say this? We're in constant talks with at least 3 or 4 of the 8. That's all I'll say.
Okay. Thank you.
We have one last question. I just wanted to remind everyone on the phones, if you have a question or if you were in the queue before and you want to ask another question, press 01. Question, please go ahead.
Yeah, hi. For takeovers that have occurred for pre-production phase companies, what has been the price per ounce compared to takeovers that have occurred on miners that are already in production? What is the difference in per ounce takeover prices?
I don't have that information. Obviously, obviously you get a higher price for something that would be in production versus pre-production, but I don't have the comparables.
Okay, thank you.
So it shouldn't be too long. We have a few more new questions queued up, so we're just grabbing their name now so we can introduce them. Please go ahead.
Well, hi, Gary. Congratulations on the new report. It looks really good on us. My question is, in order to move our inferred to indicated, how much money and how much drilling is that going to take? I'm sorry I missed that part of the call when you answered it.
No, I'll just... Yeah, but the question previously asked, and I've already stated, we don't know until we get the PEA done. At this point in time, it'll tell us exactly how much drilling is required to move the in-pit resources from inferred into indicated. But as Mike Collins said from MiningPlus, that if you're looking at a starter pit potential, you wouldn't be trying to put all of the ounces in. You'd start production on the ounces that are in the indicated category and advance drilling as you're advancing your pit walls, etc. So it doesn't all have to be done immediately before you go into production.
Okay. Could we start with the gold?
After we get the PEA, because it will tell us exactly what we have to do.
Could we start with the gold first? In my discussions with you before, I understood the gold is pretty accessible, and because the price of gold is really high, could we start with an open pit over the gold?
Oh, no, the gold and silver occur together, so you cannot do one without the other.
Sorry, I misunderstood then. I thought the gold was in an area separate by itself.
Okay, what you're thinking of is there is a small area to the southern part of the ridge that hosts La Preciosa, still well within our property boundaries, that has higher grade gold values in the drill indications that we have, but it's way outside of the resource block right now, and it's future target for future exploration, but it's not in the resource right now. Maybe that's what you're referring to.
Okay, and one of the fellows asked about a price per ounce for takeouts. Now, Minefinders was starting to produce themselves. What was the takeout price on Minefinders per ounce? Do you remember?
I don't have the price per ounce, but it was 1.5 billion, and they had 300 million in the bank, so roughly 1.2 billion. And I don't have the price per ounce.
How many ounces did they get?
I don't have that. Okay. Sorry.
It was a pretty good takeover, though, and I can see that. Do you think that we would be more saleable if we were to commence like an open pit operation, even if it was a heap leach or something?
Don't have the answer to that either.
Okay, just speculating.
And the other component of this won't be a heap leach. This is not your Nevada-style open pit deposit. It's still the mineral is going to likely be mined conventional mining using CIL and Merrill-Crowe, so it won't be a heap leach at all.
And if I could add to that, Guy, I think with the new information and the resource that's coming out, that we're pretty saleable.
That's what we're all wondering is when it'll be coming, because as you know, I've been with you since before the first resource, and it's been a long haul for us.
Well, it has, and like I say, this resource, when we put it out, was one of our best days that we've had, and the market hasn't quite got the scope of this yet, but as the PEA comes out, I think there'll be some wide eyes.
Well, is there anybody else that would be in competition with us? We seem to have the largest resource for a silver play of anywhere in the world. Is there anybody that is in competition with us?
Yeah, it's George talking again here. What we've done, or not one of the brokerage firms around town said, let's compare all of the large primary silver deposits of the world and say those that can produce more than 5 million tons annually, 5 million ounces annually, how many and where are they? The list is actually on the PowerPoint presentation on our website. I won't read in detail, but however, the summary is that of the 8 or 10 that they list, several are in areas that have some political instability and therefore may have some delay to their production. People that have new projects in Argentina, for example, or Bolivia.
Yes.
And so when you narrow it down to companies that can produce more than 5 million ounces, there's only 3 or 4 in the world that would be at all comparable to us. And Coriani's one, Lexco is another, and so there is there's very few that are that big, and so we are very unique in our space. And I would like you to go to our PowerPoint presentation. You'll see the list there in detail.
Thanks for that, because I thought that because we're in Mexico, which is a stable country and very mining friendly, and I'm afraid right now to invest anywhere in South America the way those the governments are treating mining companies so poorly. I would think that we are on the top of the list, and that the big boys, maybe even Pan Am, should be taking another look at us.
Well, we certainly are on the list of some of the larger deposits, silver-only deposits of the world, and that does make us unique. And the fact that it is a very politically stable part of the world, and one of the big advantages of Mexico is it's a part of NAFTA, the North American Free Trade Agreement. So they cannot do the silly games that you see in some of these other countries, and so we're somewhat protected by that. So we are very fortunate to have a large deposit in a very easy area. You've got to remember our deposit is just outside the capital city, Durango, so it's not infrastructure challenged. It is in a politically stable environment, so it does have a lot of very attractive features that make it unique in our space.
Yes, exactly. That's why I've stuck with you so long. We got the politics. We got a mining-friendly place. We've got a hell of a good deposit. And we're in a place where there's a great deal of silver. Isn't Mexico the #1 silver producer in the world right now?
It is indeed.
Yeah, so we seem to have everything going for us. I think we just have to be patient.
Well, you've been patient so far, Guy. You've been with us since, what, 2004?
Yes. So I'm waiting for that big payday.
Well, hopefully not too much longer.
Thanks, Gary.
Our next question is from...
I'm a recent investor. I have a basic question. It seems rather odd that Pan Am Silver would have walked after spending $18 million in 3 years of their money here on investing the project. So my basic question is there something hidden here that escapes us all that hasn't been covered, like permit problems, political problems, etc.? I mean, I'm here, live here in the United States, and you always hear about the EPA doing all kinds of crazy stuff here, and so in keeping with the previous caller here and discussions here about Mexico being a friendly environment, if there was one concern that you'd have about this whole thing going according to schedule, what would that be?
First of all, I answer the first part of your question first. There is no hidden defects in this project. As George said, it's in an area that's almost ideal, setting for mining. The infrastructure is all there. You brought up the fact that Pan American gave up the project. The only thing I would say to that is I can't speak for Pan American, so what I would suggest is that you ask the board of directors of Pan American why they dropped the project. Remembering that they also had just bought Minefinders very early before. So there is no defects in this project. The last part of your question is what would scare me the most. I can't. Price of silver. I guess that is. I mean, that's the one that would scare everybody. Is if we had a massive drop in the price of silver. Remembering that this resource was done at $25.90 silver, so we're trading almost $10 above that. It would have to go down significantly below $25 before we were afraid, but that would be the only thing.
Well, I understand price of silver, but but a permit problem. I mean, you don't foresee anything that that water problem, labor problem. I mean, is there anything here that could be really a fly in the ointment here that makes this whole thing just more risky?
We absolutely do not foresee any problem on the horizon.
Thank you.
Okay, our next question is
Hi there. I'm a Europe-based shareholder, and if my understanding is correct, the interested parties in a takeover have signed a standstill agreement, and management needs to agree to any takeover. My question would be, at what share price would management start considering a takeover offer?
I will not answer that question, as I'm sure some of our potential suitors are on the line. Let's just say, I will say that the resource has given us a renewed probably valuation of the project.
Okay. Thank you.
Welcome.
our next question.
Gary, as a longtime silver buff, buying into Sunshine back in the 70s, wading through the bunker hunt thing, taking out a fortune, bouncing back and forth, being a geologist, miner, farmer, everything you can imagine. First question this, you inferred some time back or said that Pan Am had not acquired the surface rights to the property, and that's still out there to deal with. Will that be a problem, or do these things move through smoothly?
We're actually addressing that issue right now.
I'd just like to add one thing to make sure people understand that the mineral rights are owned by the Mexican government, owned by the state, and the surface rights are held either through private individuals or communities that are known as ejidos. And so in our situation, we've had permits and we've had approval to continue to work for the last 9 years on this project. So we've been in constant communication with them. We have not moved down the road to purchase the land at the time that Pan American walked away from the project, because that was part of what they had to do to complete the feasibility study. So we've just started that process, restarted that process now. We're training the right people to do that. We don't know how long that'll take and what the costs are going to be at this point in time. It is Mexico, so if you have a chance to look at our PowerPoint, you'll see that we have no rivers, cities, towns, or anything where our project is that should come up and be any real issue. However, you don't know until you get your process, you move forward with the purchase of the land. As a matter of fact, where the open pit is proposed right now, the two open pits, it's one very large one and a slightly smaller one. It is open grazeland right now. It's not even under agricultural, any kind of agricultural growth. So where we would have to put the waste dumps and tailings, that may encroach in some of the agricultural terrain. So it is mostly subsistence bean farming, and so that works to our advantage too. So right now we don't anticipate there's going to be a major problem in acquiring the land, but we're just starting down the road on our own, so we will know as we move forward.
Thank you. Last question. Gary, I met you, your team through the years, not always identified myself. Looking forward to the future, a buyout of the property, can you keep your team together and take us on to another project?
That's always possible.
Thank you.
Okay.
Our next question.
Yeah, hi. The potential suitors, do they have more or less or the same amount of eagerness to complete a takeover with the new resource estimate compared to the months and months prior with the old estimate?
Very good question. We don't know the answer to that yet. This new resource has just gone out recently, and the MiningPlus put in months and months of work on this, and it's very in depth, and there's a lot of data. So I think it took some people by surprise. And I suspect that they've gone back and started to rework some designs and to see if they can agree with the MiningPlus. But it's a very good question. And I suspect that it will increase the awareness and the interest.
I was under the impression that because it's open pit versus more underground, that the cash cost per ounce would be significantly less, and therefore they would be more eager to do a takeover.
That's potentially very true.
Lastly, how many months would it take to get into production if a suitor did do a takeover? What is a realistic time frame, like 2 years, or for them to actually get production?
I'm gonna turn that one over to Mike at MiningPlus.
That's a pretty broad question. This is Mike Collins speaking here. I guess you've got to go through your PEA process, which is ongoing right now, and then between your PEA and your final feasibility or bankable feasibility, there's always a period where you look to optimize the data set that you have. Perhaps you revisit metallurgy and say, well, is there a slightly better process? So there can be a significant time frame. One of the things that Orko has been doing is looking at getting in front of the questions that from the resource calculation that we've done, looking at it and saying, okay, well, what can we do now, looking down the road towards the feasibility, and what do we know is going to be asked in between, so that we can move that timeline, shrink the timeline, and get to a final feasibility number sooner.
Would 2 years be realistic if someone were interested in the next few months to be in production within, let's say, 2 years? Is that realistic?
I'd be completely offside if I started telling you when it was going to go to production or go to construction.
Okay.
If anyone on the phone has another question, please press 01. For now, our last question.
Hi to everyone there. I got one question. What percentage of the company does Sprott, Pan Am, and Gold Corp still hold, and how many shares does it convert to? If you can answer that.
As far as I know, Pan Am still has 4 million shares. Gold Corp, as far as I know, still has 3 million shares. And sorry, Sprott was the other one?
Yes.
Mike?
Sprott's around 7.5.
7.5 million.
Well, it seems like you all have confidence. That's good. You guys are doing a very good job. Keep it up.
The big one is the Van Eck Fund, the GDXJ, which they have just around 10 million shares.
Very good. Okay, excellent job. Thank you very much.
You're welcome.
So we do have another question.
Do you know if there's been many analysts write up on the, as a result of the new resources? Has there been much written up by the analysts, and what kind of feedback have you been getting?
Oh, this is Mike here. As far as the analysts are concerned, I think this resource coming out last Thursday or 2 weeks ago roughly isn't giving them enough time to prepare something. But I think there's a number of analysts that are actually looking at writing us up. I know the guys from GMP are probably revisiting a new report at the moment that I'm aware of. Other than that, I can't really tell you if there is anything else. But there is a number of new analysts that have come and talked to us over the last 10 days, and I'm pretty sure that something will happen.
Okay, great. Great work, everyone.
So we don't have anyone queued up for now on the phone.
Okay, well, thank you everybody for dialing in, and hopefully we answered the questions. If you come up with any other ones, feel free to phone us or email us, and thank you for your time.
So ladies and gentlemen, this concludes the Orko Silver Corp Management Call. Thank you for your participation. Have a great day.